Hey everybody, I've decided to make another video regarding this whole thing with NIO, and not only just NIO though, there's a lot of other companies that have gone down tremendously in the EV sector, except for Tesla. And there's also a few other companies as well that have held pretty well, but it's just that I don't really follow as many companies as I used to. The reason why is because I've been trading in and out of NIO, and you know, um, I've just been focused on a few companies and rather than focusing on companies that I don't have any money in, I only focus on companies that I have money in, like NIO and Tesla. And I also do have some money in things like Solo and Candy as well. Um, and I had traded out of Helion, for example, a while back. But, oh, and I'm swing trading IDEX here and there. But, um, I don't know. I just wanted to go over this because I personally do have a prediction on where I see a lot of these companies going. And I just want to give my food for thoughts. Now, I'm not a financial advisor, and I'm just someone who likes to make money. But anyway, because of that, I just wanted to go over a few things that I've noticed personally, and so far, in most occasions, I've been right. And for example, like this week, it was a pretty crazy week this week, right? This week we started off at $52. We had a slight dip, and then we went down here all the way to we actually hit around $38 pre-market. And at this very moment here, I told my friends, hey, today's gonna be the best day to buy, because the fear in the market and all the fear and uncertainty was gone, because after today on Wednesday, it was all gonna be gone by that. So people bought the dip here, and I bought some around here as well. I bought a lot of calls, I bought some shares, and then I ended up selling around here. And the profits could have been better if I secured them around 47, but you know what? There's so much volatility going on that at this point, I had to look at other companies and what they were doing, because yes, there is a delisting fear going on, but that doesn't necessarily mean that it's going to happen, because it's not really delisting, it's just an auditing compliance. So what does that mean? It just means that Chinese companies have to be audited to US standards, and they have to be overviewed by US auditors as well. Is that a bad thing? No, in my opinion, it's a very good thing. Why is that? Because if you have companies like NIO, who people fundamentally believe in the company, they're doing amazing things. And if NIO was in America, for example, and they're stationed in California, and they had all these NIO stations in California, for example, and along the West Coast, well, and Texas, for example, people would be pouring their money into it. They would be looking at this like the the rival of Tesla. This the share price would be more than just $43. It would probably be in a couple $200, $300, $400, $500 if that were the case. And in my opinion, because the delisting fears and the auditing compliance has been such a big thing, and it's been going around for so long actually, I have to address this, because it doesn't make sense why there's any fear. Because if your company in particular complies with these US standards of auditing, then that means your company in particular is going to have better investor relations, and you're going to see companies maybe like ARK Invest, but they already invest in Baba, for example, which I have a lot of money in. But you're going to see a lot of these companies, you're going to see a lot of these hedge funds and indexes, and you're going to see a lot of smart money basically go into. You're going to see a lot of retail investors who are on the fence investing in Chinese companies start investing in these Chinese companies because they have to comply, um, which is actually a really great thing moving forward, especially if you're a long-term investor, if you believe in the company, if you wanted to see a targeted audience that was on the fence about Chinese companies. They're probably going to start investing in companies that they love fundamentally, but just didn't do it because they're Chinese. When I first invested in Tesla, I was looking for a second bet. I thought to myself, hey, I have a lot of money in Tesla here, and I bought in really well. At the current price, my average is around $39, $38. But this is post stock split. So pre stock split was around 180s, 170s, or something like that. And I never expected it to rise that much. But at the time, I was looking for the second best bet, and I looked through many electric vehicle companies, and NIO ended up being the only company that seemed worthwhile, that was going to be innovating. I didn't want a company that was just an electric vehicle company. I wanted a company that was going to be able to capitalize on the biggest future market, which is robo-taxi, autonomous driving, and something that I saw was going to be affecting the infrastructure similarly to Tesla, and NIO was that. And has anything changed with this company? No. Sales have been increasing month over month. Um, Investor relationships are getting significantly better, especially with this auditing compliance. I see a lot of growth not only within the company itself, but I see a lot of fundamental and external factors as well. Like China is increasing their electric vehicle subsidies. Xi Jinping and the CCP are pushing for more of a green technology and more electric vehicles by 2035. So I see NIO as a key player in this. As long as they keep increasing their sales, and they keep working towards R&D, and they show signs of improvement, then I'm going to keep investing my capital into this company. So what did I notice in particular? Well, I've noticed this. Since I've been in both these companies for a long time, let's see, I was in Tesla at this price right here, I believe. Somewhere around here. Yeah. I think it was a little bit early. I think it was like around February. Yeah, I think it was around here. I don't know. I'd have to look at my portfolio again, but I know that it was somewhere around. Nope, it was actually before that, because this is actually post stock split. So I think it actually might have been around here, is when I invested in Tesla. And then when I was in NIO, I know that my average is really low. This was back in, I believe, it must have been somewhere around here. I don't know. I think somewhere around here. Yeah, somewhere around this range. And so I've seen a lot. Before, when I was following these companies more, these days I don't as much because I have other things going on, and these are long-term holds for me. But because there's so much volatility and so much uncertainty, I want to make money. And because the big run-ups we've had with both these companies, my attention had to be directed at them again. But something I've noticed similar between these two companies is that they tend to follow each other in the technical patterns, and that's not a good or bad thing. Sometimes it can be a good thing, sometimes it can't. But before, what I used to do was that every time the stock would move, uh, every week or two, a month, I would always make a story. Like I'd be like, oh, okay, so during this time, like in February, like, oh, we had a big run up from, I don't know, like $2. Like around the time I invested, Mobileye had just come up again, and so it went from like $1 to two, and then we saw over here. This is around the time Goldman Sachs updated them, and then we had some more certainty with the Hefe agreement with the Chinese government backing NIO. There was a lot of fear and uncertainty around this point here, and then we just saw this slow rise up because of bank analysts upgrading the company itself. We saw like stimulus checks come out as well. We saw quantitative easing as well. We saw China's economy doing significantly better during the time of crisis. And then from here, we saw like a lot of the quarterly earnings doing really well. We saw more company fundamentals increasing. And I don't see, the thing is, I don't follow these companies as much as I used to. Actually, I probably had a better grasp on these companies 7 months ago, but that's okay. What am I looking at here? So, something we need to really consider heavily is that I know a lot of people are scared right now, and that's okay. I understand completely. But what happened around this price? What happened here? Not here. Okay, remember this part? Remember during March we had that big dip when it came to Tesla, right? And during that big dip, people were really, really scared. I held my shares because I didn't really care. I knew this was gonna go up anyway. It's just people panic selling and stuff, and the big short attack, because why not, right? You want to profit as much as possible. If you see profit taking from NIO, for example, up here, and if you're trying to short the stock, you're going to try to create as much fear and uncertainty as possible, right? So you're going to talk about Andrew left. You're going to talk about the possibility of a Chinese compliance auditing. You're going to talk about as many bad things as you can talk about, just to bring as much fear as you can. But in actuality, this is more profit taking. It really is, because you had this huge run up from here, $27 all the way up to here, right? So from October 19th to November 23rd, you had this huge run up. So you can only expect profit taking. In the stock market, there are more green days than red days, so don't be scared. Obviously this has happened before here. We've had huge run ups here, and then we had consolidation periods, and this was such a huge run up that we just have to have a drop, and we're gonna have to have a consolidation period, and that's normal because we've even had companies like Tesla, right? You have these huge run ups, and then drops, and then you have consolidation periods. All right, huge run up, consolidation. I mean, profit taking, consolidation. I mean, I can't justify this. This is crazy. Like, even I didn't expect that at all. But, what's the current share price of Tesla? It's something you need to consider because I see a lot of NIO investors who are scared, right? But what is the current share price of Tesla? $599 per share, right? $599 times 5. That is nearly $3,000 per share, right? That is crazy. My initial investment was around 180 something per share, 170 something. Yeah, that's pretty crazy when you think about it, right? I'm up over 1,400 something percent. But the thing is that, look, yes, don't ignore the 500 or ignore that. Ignore this number, 599. Look at this pre-stock split price, okay? At today, as of December 4th, we are at $3,000 per share in Tesla. Look at this. Look at this. Maybe we can use this instead. 6 months ago, on June 25th, we were at $197 per share. Okay, that's pre-stock split. That's post-stock split. So 197 times 5. That's $985. That's half the price of the current share price. No, wait, that's 1/3. That's $985. Then look here, September 8th, a very important day. Why? Because at this moment right here, I had a lot of friends who had just recently started investing, and what they do, they asked me, hey, what's gonna give me a better return on my investment, NIO or Tesla? And I said, hey, you know what? I invest in both these companies, and I see NIO having a better return on investment in the short term, and in the long term, I see Tesla as a safer bet. Why? Because Tesla has been through all the hurdles that NIO is going through right now, even though NIO is significantly further than what it was in the beginning of this year. So at this point, I said to myself, okay, there's going to be a lot of people FOMOing in, right? Because I believe this is the time when Elon Musk came out with when he came out with being listed on the S&P 500 along with the stock split. And there were other things like he was trying to advertise his transhuman communication thing with his pig or whatever. And that's all noise to me, because at this point right here, I knew Elon Musk was just trying to pump the stock up so he could do a share dilution, and that's what happened. So we dropped from and you know what's funny, I actually bought calls here. And I sold my calls around here, and then it dipped all the way down to here. And I see NIO in a similar position to this right here, this whole thing right here, right? We had this huge run up with NIO, and then we had a profit taking, and then we had a small little push up, and then we went down. So I don't know if it's going to go down significantly like this, because the companies are different and the positions are different as well, but there's actually a lot of similarities with the patterns in the chart. And this could just be a coincidence, but that's how people should be looking at it, in my opinion. There are a lot of similarities between the two companies when it comes to the charts, and even fundamentally, people would argue that NIO and Tesla have more in common, even though their business goals are a little different. It's just that they both want to capitalize on the future market that's not really tapped yet. But anyway, so after this huge run up, right, with all this FOMO, all this Robinhood money, all the FOMO, blah blah blah, we see similar to this, right? All the FOMO, all the blah 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 Robinhood money. This is actually, there's a lot of similarities here, in my opinion. Not fundamentally, but with the type of dumb money coming in here, right? We have a lot of FOMO, We have a lot of dumb investors. We have a lot of newbies coming in around this price, all like Robin Hooding it up, Wall Street betting it up, all these dummies coming into here. Same thing here. All these dummies, all these Robin Hood kids coming in, and then a huge drop from profit taking. And at this time, you could be like, oh, Elon Musk overvalued the company. Oh, profit taking. Oh, shorting, whatever. You can make up all the stuff you want, but this is just what it is. It's just a big profit taking, and because that's what I did. I profit took. I bought calls, sold my calls, profit took, and I knew this shit's gonna go back up. It just does, okay? Because this company, just like NIO, have great things going for it. The fundamentals didn't change at all. They've only improved. So what happened here? Consolidation, going up, consolidation, and then up tremendously. And this is only less than what? This is only a month and a half ago. Since we met the lows here, a month and a half from here, September 8th, October, November, December, 2 months, we reach all-time highs. Why? Because nothing fundamentally in the company has changed. It's only gotten better. The sales have increased. And what is this right here? This is only due to, there's a few things, right? Um, being officially listed on the S&P 500. But even if we were officially listed on the S&P 500 here with Tesla, there would have been profit taking. There's just no way there wouldn't have been, because even I profit took at this area because it was so obvious. So there's a lot of people who took profits at this point. So yeah, maybe if we stayed on the S&P 500, we wouldn't have dropped as much from the highs here, 498 to 330. But there would have been huge profit taking. And what do I see here? After this is listed on the S&P 500, after all the indexes have to price in Tesla and buy Tesla, it's gonna rise, and then there's gonna be profit taking, because stocks don't just go up. There's ups and downs. So stop being worried. It's gonna happen. And the only thing I see going on right now is that there's gonna be a lot of people who are gonna be shaken out. And no matter what, if the company's doing great, we see banks and analysts upgrading NIO itself. I wouldn't worry personally. It's not a big deal. Like, if you read into the compliance auditing, is it really a big deal? No, it's not. Is it new news? It's not new news. Is it a bad thing? It's really not. It's a great thing. It actually just means in the long term, there's better investor relations. But let's look at here, September 8th. What is 330 times 5? 330 times 5 is 1,650. Okay? Tesla is now at $3,000 per share. So it literally doubled from 1,600 something to 3,000 in 2 to 3 months time. That is crazy. That is insane. And that's the way you should be looking at it. Because look, there's just profit taking. It's just how it has to be. But look at the overall chart, okay? Look at my mouse, look at my cursor, okay? I'm lazy. I'm not going to do all the technicals. I'm not going to draw lines for you guys, sorry. But look at this. If we had just gradually gone up, we would have been right here anyway at $43. Look, we went up, profit take, up, down, but look, huge up, right? If we had just stayed consistent by the week to week, look, we would have just gone up gradually around here. So maybe this is a justifiable price. Maybe it might drop a little lower, but you know what I'm saying? If you look at the overall chart, the stock's doing really, really well, and that's why you shouldn't worry. Look, in the long grand scheme of things, these things are just little blips. Has the company changed at all? No, it hasn't. It's only doing better. If NIO was in America, this company would be priced way higher. As anti-Chinese sentiment dies down because of Joe Biden and the left, and more EVs are pushed, and there's more transparency from investors to Chinese companies, these companies are only going to go up significantly more. And what do I predict? I predict in a couple months from now, 2, 3, you know what, we're in December 4th right now. After NIO Day, Q1 earnings showing that they beat Q4 and Q3 of 2020, I see them doing something similar here. I see them rising. Okay, I see them rising, consolidating, and then rising even higher. The thing is that this rise right here, period, this consolidation period, it actually might go up sooner. Why? Because this can go up as soon as we see December sales. Like if December sales beat um, November sales and they beat consumer expectation, investor expectations, it could go up. If it just sort of stays the same, we're just gonna go through this consolidation period. If January shows promising numbers of either beating December or matching December, expect NIO to go up. Expect in February to go up if it beats the sales. In Q1, if Q1 outperforms Q4, which I believe it's going to do because NIO is in a snowball effect, I see the company rising tremendously, similarly to this. Now, remember, this has a lot to do with FOMOing and other external factors beyond the company's fundamentals, like being listed on the SP 500 and indexes having to buy into this. But I wouldn't be scared. Okay, and the biggest reason why you shouldn't be scared is because the company's doing better. We went If the company's doing better fundamentally and only improving, again, Tesla, 1,650 all the way up to $3,000 per share in less than 3 months time. Okay, 3 months time. You guys gotta stop looking at the day to day, unless you're swing trading or day trading, which I don't do too often, but I will when I see when there's a lot of fear and panic. I will do it. I will only do it at these times because I understand these companies fairly well. Um, don't do it. I would hold, and if you're a bag holder, just keep holding. What do you have to lose at this point? Not much. Unless you really need the money, then sell out. It's not for everybody. But you know what? I gotta be honest with you. Because I've seen the volatility of Tesla, I've learned how to stomach these things. But yeah, with that being said, I wouldn't really be too scared. And the last thing I want to do as well is that I want to look at other companies as well, and we can compare it to NIO, because Tesla's in a different state right now because they got listed on SP 500. But let's take a look at the 1 month chart, and we'll take a look at the 1 month chart. Very similar. Two different companies based in different countries, selling different things with different business models. The only thing that's similar between the two is the fact that they're both in the electric vehicle space. Very similar month to month pattern. Look at that. Rise, rise, drop, drop. Rise, rise, drop, drop. These things are very similar. Look how similar these two companies are when it comes to the technicals. Let's look at another company, XPeng. And we'll look at the 1 month. Now, I'm not too familiar with this company. Oops, that's not it. XPeng Motors. 1 month. This is really similar, right? Now, this one has more in common. Now, the business models are slightly different, but look at this, Rise, rise, drop, drop. Rise, rise, drop, drop. Look how similar. Look, if I flash these back and forth, I'm doing this lazily, but look how similar these are. Okay, but the one that shocked me the most was the fact that Workhorse had similar patterns, just because they're not even in the same country. I don't know. I've heard Planet. I don't really know too much about Palantir. Here we go. Let's take a look at this 1 month. This is not too bad, actually. But similarities in the charts, right? It goes up, dips, right? But it's not up here, you know. And it just seems like the whole EV sector in general is taking this hit. So it can't be just because of the Chinese delisting. It's not that. It's just profit taking all around the boards. Now, something that something that you can do as well, and I advise against this, but look, if you just read the general consensus of the people here, most people in general are bullish, but the bears will generally say the same thing anyway. Like they always say the similar things. It's just, I don't know. It just doesn't really seem like that big of a deal to me. It really doesn't. But I can't. This is silly. I just don't understand why. Wow, this guy's really weird. What the hell? He's spamming this whole thing. But yeah. Anyway, there's a lot of similarities when it comes to the charts right now. So it's not just NIO as an individual company. It's the whole electric vehicle sector in general. So I personally wouldn't sell. It just when all the companies are doing similar things, whether it's Chinese or based in the U.S. and they're doing similar things, it's profit taking. There's a bigger picture behind it. But when you're stuck in the middle of the things and you have a lot of money invested, I can understand why you're scared, and that's perfectly normal. But try to use logic and reasoning, come up to a conclusion, have a plan to exit, have a plan to hold, and always have a plan to make a profit because you know you need to stick to a plan, and you need to always constantly update your plan as well. So have plans, have A, B, C, and D, and then as the week to week goes by, check the fundamentals, check the what the world's doing, check how the financial world's doing in the economy, and always update your strategy. One last thing I want to do, because I am swing trading IDEX, is that let's see, like, I don't thing is I don't follow these companies as much as I used to, but let's take a look at this. Is there something not this. Let's take a look at this. Is there something similar going on with the charts around here? Sort of, yeah. Look, we had a stagnation period, right? And I'm swing trading this. I don't know why I am, but I just am. Look, up November 24th. November 24th. Peaks. It peaks at the same time. And then down. And then down. So look how similar all these companies are. They're very similar when it comes to their patterns. So don't be worried. And honestly, if you're not just in NIO, you're in XPeng, Lee, Workhorse, IDEX, all these other electric vehicle categorized companies. Don't be afraid. It's not bad at all. Again, look, Tesla went from $330 in September 2020 to reaching all-time high of $3,000 on December 4th. That's how fast these things change. I cannot express this enough. So, look, I'm not a financial advisor. I'm just someone who likes to make money. I've been right majority of the times. Share this with your friends, especially if they're worried. Let them know, like, hey, this is how you should be looking at things. And also, if your friend's scared about the Chinese listing, which is actually just U.S. compliance auditing, explain it to them like this. In the short term, there's a lot of volatility going on. There's a lot of bearish sentiment going on. Did the company change? No. Why? A lot of electric vehicle companies, not just NIO, not just XPeng, they're all going down at the same time, similarly in the same fashion, on the same day, November 24th. So explain it to them like that. Not just one company in particular in this sector is going down. Majority of the companies are going down. Tesla's only holding up well because they got listed on S&P 500 finally, and now all the indexes are finally having to buy into them, and there's a lot of FOMO involved. And then there's going to be a lot of short selling as well later on down the line of Tesla. Stocks don't only go up. There's going to be more green days than red days. If the Chinese auditing to U.S. standards compliancy build is really pushed, expect that to be a good thing. Okay, NIO has come out and said that they comply with it on numerous occasions. That means that there's a lot of people who are on the fence about investing in Chinese companies because of lack of transparency. Well, now they're going to have the transparency that they wanted. So in the medium to long term, while there's a lot of volatility now and fear and uncertainty, it's only going to go up. Because maybe, for example, like your uncle, who may be a little racist towards Chinese people, who doesn't trust the Chinese, might be like, you know what, I love NIO, I love the company, but I don't trust the Chinese. Well, now they can, because they're being they're being monitored. Their accounting is being monitored by U.S. standards. So that means yes, you can finally trust them. So you can see a lot of large indexes and a lot of large hedge funds who were maybe not interested in investing in Chinese companies because of the uncertainty, invest in the companies because it's more certainty. Let's look at here. Let's look at the analysis. No, well, not this. Here we go. So look, large shares of held by large institutions, 43%. 43%. That's a lot. More than a little bit less than half the shares held is held by large smart money. And the top holders still, Bailey Gifford, BlackRock, Vanguard, right? We have all these JP Morgan, all these credible names who have more resources, more connections than us, who probably have their own people who can actually really check with their accounting and auditing, right? Tencent as well. And then top mutual funds, Vanguard, iShares. And then we also have smaller ones as well that, like a lot of retirement funds, like that California one and whatnot. There's so many. And that's a great sign. Look, institutional shareholders, a lot. Still a lot. 43%. But look, all these are up. All these are down. XPEV, Nikola, Lee, Workhorse. These aren't even this and this aren't even Chinese company. They're both American-based companies. So it's a good thing. Like, it's not just this one company in particular. There's a lot of companies in this sector in general are just going down, and you need to think about it that way. So I wouldn't really be worried too much. Um, there's really no reason to be worried at all. So with that being said, just power through it. It's gonna be okay. Look, here's another company I have a lot of money in. Okay, Baba. How's Alibaba doing? Look, we had here. What was this due to? This was what I don't know. I don't follow. Look, I buy these stocks. I do the research initially. I look over their balance sheets and I think, okay, is this gonna be a good buy? Yeah. I bought Alibaba at I think $199. Right around here. Yeah, I bought around here, and I bought around here. Yeah, this is where I bought. Did I sell here? No, I did not sell here. Want to know why? Because the company still fundamentally did great. Now I heard there was a lot of things about Ant and the IPO of Jack Ma, having having a lot of things going on with them, and that could have brought the share price down. But in the long term, does that mean anything bad? No. Look at that. It's just a blip. It's just a blip. Is the company doing better? Is the company doing better? Yes, it is. It's getting better. They're always improving fundamentally. But look, this is a Chinese stock. Yeah, we had this small run up, right? Right here, and then profit taking, right? And the Chinese delisting fears and all that stuff. Chinese auditing compliance. But look, Baba wasn't even hit that significantly, and this is the Chinese company that this is like the face of all Chinese companies when it comes to the U.S. Like ARK Invest and all these other people. Your mom's and dad's retirement fund probably has money in Baba as well. Look, they were barely hit. Okay, at most, this is what you should be looking at. Like, what's the percentage from here to here that was lost from the delisting fears? Not that much, especially not in the long term. That's how you should be looking at it. You gotta when there's a lot of fear and uncertainty, you can't just look at the company in particular. You have to compare, you have to look at all the external factors. But this is a long video, really really long video. Probably because there's a lot of things you need to consider moving forward. And yeah, anyway, if you're a bag holder, I would just keep holding that bag personally. If you're trying to get in, honestly, this is probably one of the best prices you can buy in. Look, November 18th, December 4th, November 13th, November 11th. What's funny also is that Elon Musk tweeted that thing about Tesla being 420 and NIO being $42. That was so recent. That was last month. Look, It's just profit taking, guys. Don't be scared. Just be smart. Just you have to look. See how I don't just look at this one company in particular? Because I know the fundamentals are only going up. Sales are going up. See how I look at everything else? What's the possibility of a stim check coming out next month? What's the possibility of more money being quantitative? What's the possibility of more quantitative easing? What's the possibility of all these things? You have to consider about 1,000 different things and then pick which ones are the most important to you to come up to a theory about how you're going to play the markets. Look, I've hardly talked about the individual company itself. I've been talking about other companies, how to compare it, the economy around it, and there's just a million things you need to consider as well. But with that being said, I hope you all have a good day. Don't worry too much. If you have any questions, I can clarify better. I don't have a script. I just go off whatever's on top of my head. I probably missed a lot, but the general idea is don't worry, okay? There's nothing to worry about. This is simply profit taking. The delisting fears is BS.